What are accounts receivable confirmations? First, let's consider what are accounts receivable. Those are amounts of money that customers owe to a company or organization. Accounts receivable confirmations are an audit test work procedure, and they're typically a required audit procedure. However, if the auditor decides to use an alternative procedure instead, they do need to justify the reasons why. Potential reasons why they may not do a confirmation is receivables are not material to the financial statements, they're only a small amount on the balance sheet, confirmations in the past were not effective because responses perhaps were not returned. So how do auditors perform this procedure? The auditor asks the client's customers to verify account balances, and this tests the assertions of existence and rights and obligations. There's little evidence here for the valuation assertion, though, because just because a person says they owe an amount of money does not mean they'll actually pay it. When the auditor sends out confirmations, this is typically a manual process because they're contacting customers who may not have electronic confirmations established or a way to do that easily. So even in modern times, this is still usually a manual letter mailing process. There are two main types of confirmations, positive and negative. Positive provides the strongest level of evidence because the customer must respond yes or no whether or not the account balance is correct, so whether or not that is actually the amount of money that they owe the business. A negative confirmation can also be used, but this provides weaker evidence because the customer is only going to respond if the account balance is incorrect. Another subtype of a positive confirmation is called a blank form or a blank type confirmation. This requires that the customer actually fill in the amount of money that they owe. Alternative procedures that could be conducted instead of confirmations are examination of subsequent cash receipts. So if an account receivable was outstanding at year end, and then shortly after year end a payment was received, then that provides evidence that that was truly the amount owed, because typically people don't go around paying money they don't owe. What are the impact on internal control evaluations of doing accounts receivable confirmations? This is actually a dual purpose test. It tests both the account balance on the financial statements, but it also tests the effectiveness of internal controls. If the auditor receives many exceptions, so many customers that say, no, this balance is not correct, that could actually indicate an internal control deficiency, and the auditor may need to go back and adjust their risk assessment procedures.